Hello everyone, welcome to a breakdown on EU. I'm gonna start off with the daily time frame, and we're gonna see how I determine my daily buys and determine my short-term drawn liquidity. Right here, I was first of all expecting this range high to be taken, right? We all know that, and then it was finally taken last Wednesday, and the higher time frame drawn liquidity was reached, right? Now that this drawn liquidity has been reached, we have to determine what happens next, right? What happens next after our drawn liquidity is reached in the higher time frame? And to answer that question, and the answer to that question is pretty simple. As soon as the higher time frame drawn liquidity or key level is reached, the first thing that you're gonna expect right away is a retracement profile, right? The first thing price will always do after a drawn liquidity or a key level is reached is to retrace lower to close the weekly, daily, or the monthly candle, depending upon the framework, right? In this case, we are looking at a higher time frame drawn liquidity, and that has now been reached. So we're gonna expect the weekly candle to now close lower, and we're gonna expect a retracement profile on the weekly time frame in the monthly, on the daily time frame, right? In this case, you can see that the drawn liquidity was reached on Wednesday, right? It was reached on Wednesday. So the rest of the week, we would have expected a retracement lower so that we could close the weekly candle lower, right? Now, this retracement profile can either turn into a reversal profile or an expansion profile depending upon your higher time frame long-term drawn liquidity, right? And the lower time frame confirmations, right? You're gonna determine your higher time frame drawn liquidity, long-term drawn liquidity on the monthly time frame, and then based on that, you're gonna see whether you are expecting another expansion higher or you want to see that this retracement turn into a reversal profile, right? So the first expectation will always be a retracement, and then later we're gonna measure and gauge the order flow on the lower time frame and determine the long-term drawn liquidity on the monthly, and then based off of those two main factors, we'll either expect a reversal or an expansion after the retracement profile has occurred or ended, right? Now we know that we can't have a reversal profile after a retracement profile, right? But the nature of this retracement could be that of a reversal too, right? And we're just calling it a retracement for the time being, right? It can then change into a reversal too, right? Just for the time being, we are calling it a retracement, right? And unless and until more price action and more confirmation are shown, you can then call it a reversal, right? You need to remember that. Because we know that the retracement profile and reversal profile have the same core concept and core characteristic, right? Both of them serve the purpose of price expanding in the counter or the opposite direction, right? That's what a retracement or reversal is, right? And the only way we're going to differentiate between the two is by seeing lower time frame confirmations and then accepting that profile is either a retracement or a reversal based off of the higher time frame drawn liquidity, right? Also, right here on the daily, you can see that the first 3 days of the week we kept expanding higher towards the drawn liquidity, and we reached it on Wednesday, right? So now on Wednesday and the rest of the week, our expectation would be a Wednesday midweek reversal weekly profile, right? We've talked about weekly profiles before, and I've shown you that when on Monday a key level is reached, then the rest of the week you're gonna expect a reversal profile on the weekly or a Wednesday midweek reversal weekly profile, right? Until the weekly candle closes on Friday, right? That's what we would expect based on this framework and price action. So right here, after the drawn liquidity is reached, then I waited for the another day, which was Thursday, and then on Thursday my drawn liquidity was lower and my bias was bearish. I determined it to be bearish, right? So now my objective would be to go to the 4-hour time frame and find a CRT there so that I can position myself towards the drawn liquidity which is lower. Now you would ask this question that where is the drawn liquidity, right? And the first short-term drawn liquidity for you would be the Wednesday candle low. That's the least that you can expect price to go to, right? That's guaranteed. As soon as a higher time drawn liquidity is reached, you're going to look at that candle, whichever that candle had tested that key level, or whichever candle reached that drawn liquidity, you're going to expect that candle's low to be taken. At least that would be your higher time frame short term drawn liquidity, right? Now the long term, you're gonna determine that based off of the weekly and monthly time frame. But for the short term right here, you're gonna at least expect this Wednesday's candle low to be taken, because it was this Wednesday's candle that reached the drawn liquidity. So on Thursday, my drawn liquidity on the lower time frame and on the intraday charts was the Wednesday's candle low, right? So now let's go down to the 4-hour time frame and let's see what was my thought process on the 4-hour. So on the 4-hour, you can see that the drawn liquidity was reached with this 4-hour candle right here, right? And this is the 9 a.m. candle. Now the time this candle was formed, right, I didn't trade it right away because we were nearing the daily close, right? And I wanted to wait till another day before taking any trade, and wanted to see some more confirmations before shooting my shot, right? So what happened is that price on Thursday came down lower and showed confirmation in the form of closing inside the CRT. So on Thursday, I then took this candle as a CRT, right? Now, even though I did not trade the first half of this CRT, but what I did is I refined my drawn liquidity even more, and I took this 4-hour candle low and this CRT low as my drawn liquidity for the intraday charts, right? And at the same time, I looked for a purged above any of these candles in a normal protraction profile on the lower time frame, so that I could take an entry there, right? Obviously I couldn't take an entry without a candle purge, right, or a CRT purged. So I kept waiting for a purge of a candle right here on Tuesday during the London open kill zone before taking in a trade, and I got that purge during the 3 a.m. when price purge above these two candles, right? And then it showed me a model 1 entry on the lower time frame, and I took that, right? So now let's go down to the 15-minute time frame to see how I took an entry there. On the 15-minute time frame, you can see that the purge happened right here with these candles, right? And price showed a normal protraction profile there, a normal intraday protraction profile. Now the reason we call this a normal intraday protraction profile is because you can see that during the Asian session and the CBDR, we formed a ranging profile, and then during the London Open, we took that Asian session high and that CBDR's high, right? And we formed the high of the week, the high of the day during London Open during the 3 a.m. candle, right? And then we reversed lower, and after we reversed, you can see right here that I got this model 1 entry right here and this confirmation, and then I took my entry there, right? Now if you see right here, then you would wonder how these candles are in order block, right? You would think that why did I consider these as invalid order block, right? And if you watch the order block chapter, then you would know that these two candles together took out this 4-hour candle's high, right? These two 15-minute consecutive candles took out this 4-hour candle's high, right, and purged it. And then what happened is that price closed below these two candles and expanded lower. And after that, I waited for price to retrace to these order blocks, which confirmed the model 1 entry there, right? And then I took my entry at the order blocks open with my stop loss above the order block, right? And I put my target and my take profit level at the CRT's low. That was my trade entry, right? So you can see, first of all, on the daily, I determined my drawn liquidity, which was the Wednesday's candle low, and I determined it based off of the fact that after the drawn liquidity is reached, we can then have a retracement profile, and we can at least expect price to take out the candles low that it tested the drawn liquidity, which was the Wednesday's candle low. Then on the 4-hour time frame, what I did is I found a CRT there, and I took that CRT and refined my drawn liquidity even more, and took the the 4-hour candle's low is my target for the intraday charts. And then what I waited is I waited for a purge and a normal protraction profile on the 15-minute time frame, and I waited for a 4-hour candle's high to be taken before I could take an entry, and I got that during the London's open kill zone, and particularly during the 3 a.m. candle, which increased the probability of my trade idea even more, because we know that the 3 a.m. candle is a macro, right? Within the bigger London Opal Zone, which is from 2 a.m. to 5 a.m. The 3 a.m. is a more refined version of it, and if you get an entry or a purge there during the 3 a.m., then it increases the probability of your trade even more, right? And you would get even more conviction in your trade idea. And then on the 15-minute time frame, you can see that I took my entry here, right, at this model 1's setup, at this entry model, and that was it. That was the trade breakdown.